guys, what's up? Welcome back to another training video. Dave Rodriguez here, one of the head traders inside the Alliance community. Let's jump right in, guys. Today, our training class is going to be about putting all our steps together, putting all our individual indicators and technical tools together to create an analysis on where we think the market will go next and to what levels. So let's check it out. Back to Link. I think we're gonna. I chose to use chain link because we've been working on it with so many of our other videos that I would like to use chain link to see to make a full view on all of our analysis technical wise together. So let's jump right in. Remember, guys, there's a bunch of steps to be able to determine where you think it's going to go next. First is creating support and resistance lines. You know, we always do that on what? The monthly. Shoot over to the monthly. Obviously one here. One here. You can see there's 3 points where this touches. We'll keep going. It's like 1, 2, 3 there. Bit of resistance there. A lot going on right there. We're just going to leave it at that, guys, because we're so high up here that these levels down here just don't matter right now. So without wasting too much time, these are the levels that we're going to focus on. There's also a small level here. Touches twice here. Okay, so what we're going to do is take a look at this on the monthly or on the weekly, and we'll clean it up a little bit. Remember, first are your lines of resistance and support, and you want to draw some zones because some of these just won't make sense. Okay, we can see that these two lines, both of them aren't needed, so we're going to get rid of one. Okay, and we're going to move this around until it makes the best sense right here. 1, 2, 3, 4, 5, 6, 7, 8. You know, all these candles. This is a good area. Now, what we could do, since this is lower and we're not really there anymore, we could draw a zone here. And then get rid of the line. Okay, we could also do that. We don't need all 3 of these, but this bottom one seems to make the most sense. So what we could do is get rid of this one, get rid of this one, and then we know there's a zone from here to here, which we're testing now. And like I said, we won't need both of these, so we can get rid of one of these here. This is a good area. See a lot of rejection in this area. So put it here. 1, 2, 3, 4, 5, 6. That's not bad. We could also place it here. I like that better. So this is what we're going to work with for now, guys. These are important levels. You see how important they are. Keep getting hit in these zones and areas. So this is our zones, and this is our support, and this is our resistance. Now we want to look at trend lines. We have an obvious older trend line here that was broken. We'll go from wick to wick. Okay, this can also place from body to body. We talked about that the other day. Body to body is what I like better on this particular trade because it just seems to work perfectly. Okay, we have a slight uptrend here. Okay, again, you can go wick to body, like so. So we have this point here, a higher low, a higher low. We're progressively making our way up after the break of the downtrend. We've been progressively making our way up. Remember, we are still on the weekly chart here. So now we can make an inside inside trend line that goes something like so. Notice it keeps making its way sharper in the bullish direction. So now we can break it down on the daily and see what we see. Wait, one more thing, guys. We want to place the Fibonacci from the newest high to the newest low on the weekly. Weekly is where we want to stick around. We'll narrow it down on the daily. So we're going to do from here to here. I want you guys to notice that if I line my Fibonacci with the bodies here and the wicks here, look what happens. The 61.8 pinpoint lines up with a major resistance zone that has been broken. Okay? And we'll look at that. We'll look at that as a point of retracement. We could even shoot down to the 78.6. Now remember, when using the Fibonacci tool, when you break all-time highs, about 95% of the time, you're going to see a retracement to this zone right here, which also is perfectly good with our trend line and still right in that area of this zone right here. Big areas of support and resistance right here. I can see these candles either deciding to hold this area and shoot directly to one of our targets up here, or probably we're going to retest this lower area in here. Let's go down to the daily and see what the candles are telling us. So now we know now we know this is the 61.8 right here. This is the 78.6 retracement on the Fibonacci. Show you guys that just by bringing this in a little bit closer. I can tell by the colors, but as you can see, the gradual climb up, breaks to high, slight retest, little double top here, before we are getting ready to break some structure. We really haven't done it yet. We're still sitting in the zone. Now, look at your MAs. They've crossed to the downside. We've hit consolidation. It looks like a backwards flag. This could shoot straight down into this area, 78.6. Look what's also here, the 200 EMA, which is the very strong point that price keeps bouncing off of. So once we've made this rise, we're going to see a slight retracement back down to this area. 61.8, 78.6, maybe another touch to this trend line and this MA would be a perfect scenario for us to then take off to new highs. If we're looking at Fibonacci's on higher levels like the weekly, we follow these levels. And anything that happens in between the retrace and the target is just fluff, guys, because we know what we're looking for. We're looking for this area here. Looking for this area here. But we need to see this retrace first. We have to see this retrace first for this to follow the structure that it needs to follow. We need to really retest this area. We shouldn't fall to the 78.6 because we've reached all-time highs. For the whole entire life cycle of this crypto, we are now at all-time highs. We need to see a nice retracement back down to this area before taking off and blasting to new highs. So guys, just remember, we've used everything. We've put it all together here. We've used our support and resistance lines on the monthly, broken them down into little zones in the weekly, put our trend lines on the weekly, placed our Fibonacci retracement tools on the weekly, and then broke it down on the daily and looked at our MAs and checked out what are they telling us. The red is on the top. It has crossed over the blue, which means bears are in control right this second. Let's reach these levels, and I bet you the bulls take over, the MAs cross to the upside, and then we start to see the next leg, and it has fulfilled everything it needs to fulfill. So that's all we have for the training video today, guys. I hope you enjoyed the bringing it all together video. I hope you use these techniques over and over again in practice. Use them in practice. Put all these tools on every chart that you have. I mean, I have a whole list of charts that I look at every day. and I go look at new ones every day. So I add to the list every day. Not every day, but I add to the list when I look at when I want to look at new tokens, new coins, new things coming out in the market, and I just see the structure and how it works, how it follows. I place the Fibonacci different places on the weekly and on the daily sometimes, and I try new things to see back testing how this all works, and that's how I've come up with all these tools and strategies, and also the mentors that I follow and listen to and learn from online. So we're seeing small things, like I said, happen perfectly. The small uptrends being broken, these little things happening, being broken, being retested, falling down completely, and meeting these areas of retracements that we really need to hit in order to find this next leg. So hope you enjoyed the video, guys. We'll be back with some more videos all week. Every week we'll have a little bit of training and a little bit of the Bitcoin breakdowns. So we'll see you guys on the next Technical Talk.